Yes, we are in a very interesting phase in the oil markets. I think we saw a big run-up last year. Oil prices have come off from their significant highs, well over 100 all of last year, literally. The markets are largely going to be range-bound, and there are some of the reasons you have covered yourself. I think you have some of the economies, especially the developed world, the OECD economies, where demand is softening because the economies are actually slowing down. But overall, because it's a case of a rebound, we are looking at something like 2.3 million barrels of growth in oil demand in 2023. The second half of 2023 is likely to see a much tighter oil market simply because of the OPEC actions and the fact that there is going to be inventory drawdowns. But will that really push the market where it was last year? Looks unlikely. And that's the reason why I said it's likely to be range-bound between $60 to $85, $90.
Really?
Yes.
This is for Brent crude?
That's right.
Okay.
Now, there are reasons why we think it could be that way. For one, if you look at the spare capacity in the market today, it's roughly about 4.5 to 5 million barrels. You still have non-OPEC crude production going strong. So if there is any increase in pricing, you will see some of that crude output go up, right? So that will keep a lid on the upper end of the market. If on the reverse side of it, if prices were to decline too much, you will see some of the crude output from non-OPEC countries fall, especially tight oil from the U.S., which is very, very price sensitive in terms of what cash flows it can generate. So that's the reason we feel it's largely going to be range-bound for the rest of the year.
Right. Now, Alok, I have to ask you about what's happened over the weekend that really potentially roiled our markets, and that's the issues and the unrest that happened within Russia, especially with the Wagner Group, that really spooked a lot of people. Now, it seems to have been resolved for the time being, or calmed down a bit. But could you talk to us about what potential it had to spook oil markets coming into this week, and whether or not it might actually have some long-term effects we have to be worried about? Can you share with us your thoughts?
Certainly, JP. I think thinking collectively the world would have breathed a sigh of relief, at least on the oil market side, that the disruption in the Russian state did not go through the worst that people feared. Because if it had led to disruption in oil supplies from the Russian state, I think what you would have seen is a disruption which could have been anything from a couple of million barrels all the way up to about 3.5, 4 million barrels. Now that kind of disruption, even if it's short term, could have really, really roiled the markets very badly. The upside to price could have been anywhere. It's futile for me to even contemplate where it could have been because it's more of a psychological reaction. The good part to it is that as things would have settled, there is still spare capacity that I referred to, which some of the OPEC countries could have turned on very quickly to stabilize the oil markets. But you would have gone through a very short period of extremely high volatility where pricing would have been actually determined by what's your psychological fear of not getting the barrels.
Right.